Hello everyone, welcome back. Today I want to talk about Merck. Merck is an American multinational pharmaceutical company and one of the largest pharmaceutical companies in the world. Merck listed in New York Stock Exchange, ticker symbol MRK. Company has 74,000 employees, 13.6 billion research and development investment in 2020. If you look at what the company does, we can see that Merck are actively involved in oncology research and development. Currently, there are over 1,000 clinical trials involving Merck's cancer treatment medicines. 30 plus Merck's production are being studied for cancer treatment, and over 400,000 patients have been treated with commercially available Merck's oncology medicines over the past 5 years. Also, Merck's involved research 11 out of 17 diseases recommended on CDC immunization schedule. Company has distributed 190 million vaccines in 2019. Merck is also a major player in combating HIV for 35 years. Although Merck stopped its own research on COVID-19 vaccine, Merck has contracted with Johnson & Johnson to manufacture its branded COVID-19 vaccine to combat the pandemic, and Merck also has 2 drugs in trial stage for COVID treatment. Merck also involved in cardiometabolic disorders and has many research facilities in many places. Let's take a look at the Q4 presentation of Merck's. In Q4 2020, Merck's sales grew 5%. Non-GAAP EPS grew 17% to $1.32 per share. On shareholders' value perspective, company paid out $1.5 billion dividend. Keytruda, a drug used in cancer immunotherapy, mainly used to treat lung cancer, stomach cancer, head and neck cancers, has seen 27% growth year over year compared to Q4 2019 to $4 billion. The sale in US alone worth $2.2 billion, and sales outside the US grew 28%. I want to point out here is that Keytruda is absolutely the money makers for Merck. If you look at Merck's total sales of all drugs in 2020, was at $43 billion. Keytruda bring in sales of $14.3 billion in 2020, which represent 33% of all pharmaceutical sales by Merck in 2020. We can see that 27% growth in Q4 year over year and 29% growth annually 2020 compared to 2019 is a good sign for Merck's long-term stabilities. Other 2 oncology drugs, Lynparza and Lenvima, see 53% and 26% growth respectively to $725 million and $580 million. Gardasil, the vaccine for HPV, grew year-over-year 41% in Q4 2020. Merck's branded medicine for the reversal of neuromuscular blockade increased 13% in Q4 year-over-year. And from a 4-year 2020 perspective, the sales of Merck was $48 billion, which represent 2% growth from 2019. If we look at Merck's 6 pillars of growth for the past 4 years, with the Keytruda growth 30% in 2020, 62% Lynparza, 43% growth in Lenvima, and the animal health growth 10%, Gardasil 6%, and branding growth 7% in 2020 respectively. Merck expects 2021 sales about $51.8 billion to $53.8 billion in fiscal year 2021. A potential growth drivers besides 6 drivers we mentioned before, we have 2 COVID-19 drugs, molnupiravir and the MK7110. The 10 million molnupiravir is expected to be available in late 2021 if approved. 60,000 to 100,000 doses of MK7110 is expected to be produced supporting U.S. government pandemic response by mid-2021. In the next 5 years, Merck's growth was still primarily driven by growth sales of its oncology drugs, led by Keytruda. Merck's growth in 2025 and beyond into the 2030 timeframe is really to continue the focus first foremost on invest beyond the best science. Whether it comes from inside the company or outside the company, execute on the pipeline Merck has. For example, Merck got islatravir, the drugs for treating HIV patients, which has the potential to be the next Keytruda to lead the company's growth. Looking at both what Merck can do to extend breadth of Keytruda's reach to the number of patients, it serves as well as its efficiency through combination as well as broadening into other oncology fields and broader mechanisms. Merck will continue to focus on business development and R&D to reach pipeline, addressing areas of high unmet need to drive performance over the next 5 to 10 years, and to revitalize discovery effort and increase expertise in biology to drive ongoing science breakthrough for decades to come. This is the key for Merck's future success. In fact, Merck was doing an impressive job in 2020 on business development and R&D. Merck has spent $10.6 billion and completed 120 business developments, which including acquisition and collaborations with various companies. Merck spent $9.2 billion on R&D. In Merck's pipelines, there are 38 programs under phase 2, 22 programs under phase 3, and 5 programs under review, ready to be approved. The company's CFO, Robert Davis, who soon will take the leadership of CEO, emphasized company's science-based growth approach, which he thinks is the right direction for the company. As I mentioned before, Merck's CFO, Robert, will become CEO in coming quarter, and with his extensive industry experience and science-based vision for the company, I think investors should be confident that the company will not change the direction and continue to focus on R&D and business development, which are the key to future growth. Also, company will complete a spin-off company called Organa, which will focus its business on women's health drugs. This spin-off will enable Merck to focus on its financial strengths on its core businesses and improve its margins. Now let's take a look at the numbers. Merck's PE ratio is at 26.8, which is lower than industry average of 34.4. But Merck's price to free cash flow is at 34 and price to book value is 7.5, all above industry average. From growth perspective, Merck is expected to grow at 9.6% in 2021 and 5.8% in 2022, which is higher than average pharmaceutical industry growth. From profit perspective, Merck has a high return on capital employed, which is at 13.9% compared to industry 9.8%. Company's financial is in good shape, although the current ratio is 1, which is not ideal, but with $63.82 billion of total asset and only $38.86 billion total liability, which equals to 1.64 total asset to total liability ratio. Investors do not have to worry about company's default. Price target based on 21 analysts is range from $79 per share to $107 per share, with average price of $96.33. And Merck stock currently trades at $74.60, which is 23% undervalued of the average price. And the stock is currently rated as a strong buy. Merck pays a 3.5% dividend or 65 cents quarterly. An investor who likes the dividend can guarantee payout since the company has gradually increased its payout since its start in 2011 and never cut its dividend. And due to its healthy financial position, the dividend will likely to be maintained. My conclusion for Merck is that overall, I think Merck stock is undervalued dividend stock. Its stock price affected by US drug regulation forced industry to cut drug price in 2020, and some of the drugs in its portfolio saw a decline in sales due to the pandemic. If those drug sales resume back to pre-COVID level and Merck continues to push its business development and R&D while maintains high growth drivers like Keytruda, it has a potential to surprise investors in 5 to 10 years frame. If you are looking for undervalued stock, this could be a nice pick into your portfolio. But if you're the investor who look for high growth stock, there are many other options in high-tech industry which may be better fit for you. That's about it about Merck stock. If you like this video, please don't forget to like, comment, and subscribe to my channel, and I will see you in the next video.